Hi, I'm Tom Lydon, editor of ETF Trends here in Hollywood, Florida at the Inside ETF conference. I'm here with Tony Rochte, who's president of Fidelity SelectCo, Fidelity ETFs. It's great seeing you, Tony.
Good to see you too, Tom. Thank you for having me.
So Fidelity is a big proponent of ETFs. We were talking about it earlier. There's a huge commitment behind ETF growth at Fidelity.
Yeah, no question. We're often asked were we late to the ETF game, and I remind people we've been in the ETF business for over a decade. We have $250 billion in ETFs under advisement on our brokerage platform for advisors and RIAs. So we're in the business. 3 years ago, we really focused on Fidelity sponsored ETFs. Today, we have over $5 billion in ETFs in 11 sectors, 6 smart beta, 3 new active bond ETFs, and then a product from a number of years ago, the 1Q.
So Fidelity's known for their sector strategies for sure. Let's talk a little bit about smart beta. Really, here's a way to get Fidelity, that's really known as an active manager, and systematizing that strategy within smart beta strategies.
Yeah, so 2 things. If you look historically, as you know, factors actually help diversify a portfolio, and they tend to do very well over time. The key though, Tom, is they don't always perform all of the time, and that's the role of the advisor. That's what's critical about the factor exposures. So that's why we launched it. The other reason, when I talked about the $250 billion in AUA, we looked and we noticed over $60 billion in factor-based ETFs on our own platform, growing faster than traditional index-based ETFs. So we're meeting a customer demand, we're unique and differentiated, and we've launched the Fidelity Dividend for Rising Rates, symbol FDRR, a Fidelity Core Dividend, quality, momentum, value, and low volatility. So those are the 6 factors, all priced at 29 basis points. So lower cost than almost 80% of the category as measured by Morningstar.
Right. Let's talk about active fixed income, because you have a lot to be proud of there.
Yeah, so in that $5 billion, just over 2 years ago, we took our actively managed capability. We've been managing bonds in Merrimack, New Hampshire, just outside Boston, for several decades. We have a great active team, and so we took the Fidelity Total Bond Mutual Fund Management team, and we actually let them run the ETF. So FBND, the Fidelity Total Bond ETF, has been out over 2 years. It's been nominated by several organizations as ETF of the year in 16, solely based on investment performance. So in 16, it beat over 95% of its peer group. And so, again, where Fidelity wants to play, Tom, is where we can add value from a management standpoint, whether it's in actively managed bonds or even in the factor smart beta space, which really is powered by our actively managed quant team in Boston.
Yeah, well, it's good to see you and your team, and it's good to see the strong commitment Fidelity has to the ETF space. We are cheering you on, Tony, and it's always great seeing you.
Great to see you, Tom.
Thank you.
Thank you.